Hey, what's up, YouTubers, day traders, and market participants? Your boy is back with another episode. We have been timing the market left and right. So with this last Friday coming, it was no surprise. We needed a pullback, but we didn't pull back when we were in extreme greed territory. So I will kind of jump on that and kind of let you know that there is no market reversal in sight. I believe this is just a pullback to just get us ready for December highs, January highs, moving into next year. I believe we will see some buying opportunities within the next 2 weeks that will set us up for a great end of the year, guys. Do not sleep on it. I'm just going to jump into a few stocks that I really like, explain to you why this is just a pullback and the market momentum has not shifted. Um, and let's all do this on a Saturday before we get ready to rock and roll back on Monday. Guys, I hope you guys are having a great weekend. It's great to get away from the market, spend some time with your family. But I also know that all us real market lovers, we love Monday and are excited for Monday. But uh, let's go ahead and jump into the charts. All right, everybody, let's kind of look at the fear and greed index first. As you can see, we are at 29 right now. That was for Friday. It is in the fear. Overall, for the year, though, you can see that we are at 70, which puts us right about here, which is greed for the year. I'm not really going to start not being bullish until we get into extreme greed. Once we get into extreme greed on the yearly, that lets me know that it's time to like really start pulling back. So we're not there yet. And then the fact that we're 1 month, we're still neutral is a very good sign. So we sold off kind of in a neutral territory. That was on Thursday. And that tells me that we haven't seen a top yet at all. If we were to sell off with a lot of extreme greed, that could mark the top to a new cycle. Since we are still kind of in this current trend, I believe anytime you get fear and extreme fear days, that is when we should start buying up the market. You know, what's Warren Buffett say, right? If fear when other people are greedy and get greedy when other people are fearful, right? So in the next 2 weeks, I hope we do start seeing some good sell-offs, and I'll kind of give my price of where we could see. All right, guys. So while we are here on the SPY, this is your daily chart and this is your weekly chart on the left. On the daily, you can see this massive green, red candle, not green, nothing green about it. But right here, massive red candle that came in and we lost this period moving average right here, which is the 40 for the blue. So I'm hoping to see what we can if we get a little bounce here back to the purple line and then the purple line takes us back down a little bit, that is possible. I don't want to jump yet into it. We also just touched the 8 period moving average on the weekly chart, right? So we had a peekaboo high, which is basically a red high, and then an engulfing candle of the last previous days, taking last previous weeks, taking out all the green there. So on the SPY, I am positioned for us to go a little bit more down. There's nothing that looks good about this unless we really get some crazy news on Sunday or Monday saying that there's been a deal, like just retracting basically this entire move. If that happens, guys, that would be insane, and we're definitely going to hit 680 next week if we just completely reverse this entire move in one day based off of another retweet and or a deal that has been struck with China or even a few other tariff deals that have been struck. So that's something to look out on, but I would caution this and a little bit of a bounce too. If we get a little bit of a bounce, I would caution that as well. Maybe Monday, Tuesday, we kind of go up a little bit, and then Wednesday, the selling kicks back in and we make another leg down. by Friday, which I could see happening too. Um, it is very healthy for the stock to pull back to the purple line, always on the weekly, especially. So we haven't at all since these April lows, we haven't really came back down and touched the purple moving average, right? So I believe we do get a touch within the next 2, 3 weeks, and that would be a 632, right? A 632 would bring us all the way back down to this white line here. And then I think all systems are a go to the upside for the end of the year push. I really do see that coming. So we're looking good, guys. We're looking good. Some stocks that I want to put on people's radar. We were talking about Pepsi. We've been talking about Pepsi for a while now, and Pepsi finally just broke out, and it broke out during the last 2 days, which the last 2 days were kind of red days, right? And that was that sector rotation I was telling you guys about when certain stocks are hot for so long they have to cool off, and then stocks that have been beaten down all year and or just haven't moved, that money could go to them. And I was calling out Pepsi here because Pepsi had a little bit of a turnaround story last earnings season. You can see this big giant candle for this week. So we had another earnings this week, but I wasn't really caring what the earnings were going to do already because the chart already told me what it wanted to do 2 weeks ago. And that was when right here, when this green bar completely took out this red one on this purple moving average. So what is that showing me? It's showing me price was above it, right? And we came back down and the purple caught it. And the purple caught it with a green basically taking out a red near key moving averages. And then what did I tell you guys? I only make like if I see the play is on the weekly chart, then I go off of the weekly chart. We were already breaking this candle, and I only like to lose one candle, but we were already starting to break this red candle. But I said, hey, it's on the weekly time frame. Let's wait for the week to finish for the move to actually be clear, to for the pattern to be clear on the weekly. And guess what? By the end of the week, yeah, we kept selling off and kept selling off. It did not scare me. We also came into this big moving average here on the daily time frame, which is also another key moving average right here. As you can see, we bounced into it, got up, then we kind of just grinded into it, held it right there, and boom, just shot up, right? And yeah, you could say it was earnings, right? Or it's just probability and a fact that a lot of people are here ready to buy. It's a very key moving average. That means on average, a lot of people have prices there. So when it got there, obviously you sell because you're far away from it, and then the price will eventually come back to it, where then you load up again for another push, right? So we have a lot of room that we can cover for Pepsi. Pepsi can go all the way up to 166. I wouldn't get too crazy yet. We did crush the 150 mark, so next is definitely 155, and then the high of this candle, which I believe is like 157 something. And if we can clear those two hurdles, 166 is in the cards, right? And I like to see it. I like to see it. We will have to let this play out. Another one that was just like this, but did not play out really well was Nike. And guess what? I'm out of it. It's that simple. Nike did the same thing on the weekly chart. Look how it's hovering above, and then it crashes back into this purple moving average. So I was like, okay, look at that. We got a green candle taking out red near moving average. So guess what? I'm in the play. I'm in the play on that green candle by Friday. I'm in that candle. My stop is right under it. So we were holding this area until Thursday and Friday hit, and then we just broke. And that was my time and that was me getting out. I'm out of this play. That that little damage did hurt, but the Pepsi play ended up paying for this one and much more. So it's all about risk management and how I handled both of those positions that really show the that really highlight just like the outcome of the overall being positive in the overall portfolio. But it's just you got to show the losers, and that was a loser, guys. I was really hoping Nike was gonna hold this area. Now it hasn't, but now guess what? We have this gap to fill, so now we're just in that gap area. So Nike's going to come all the way down to 62 before he has a turnaround story. And it might not even get a turnaround story depending on the tariffs, right? So, in the deal we get with them. But I believe there will be a deal. So, maybe low 60s, maybe low 60s. I'll take a shot at this again, back to the upside. So I'm chilling on Nike for now. CRM, Salesforce. I like Salesforce because if you see here on the weekly, I kind of zoomed out a lot there. Uh, you got this big white, the darker white, or I guess the thicker white. That is your 200 period moving average on the weekly time frame. So honestly, it's a very, very crucial area for a very, very just a long period of time for um, long-term investors. So you can see when we get to here, months of upward pressure, double top, boom, 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 pushed all the way back down to where? To the 200 moving average. You could have bought here again, got a halfway push up. Now it's just been flagging down, which is basically a wedge on the weekly, which does go back for a very long time. But my concern is you see how every time we get close to it, we're here, push up, come back down, push up, came back down, push up. Here we broke it, and for these 2 years, that should have been though the 2022 interest year. Yeah, it was basically when the Feds kept hiking the interest rates to get inflation under control. So yeah, it did break under the 200 period moving average, but then we got back up and went off to the races. So all I am is putting it on my radar right now. I am in it, and if we lose this 232 area, I will be out. But I have to see the whole entire week close under. If just, Monday opens up and we're down, Tuesday we're down, and then Wednesday it starts recovering back up above here, that lets me know it was a liquidity grab, which basically just means that it had to shake some weak people out to get for the bigger people to get their positions in. So I will wait for the whole week to close. Hopefully, it doesn't close under, but I like CRM for the long term. On the daily chart, it just kind of is getting beat up. Daily chart doesn't really look too well. That's why this might take some time. We don't really even have a strong green candle, right? It's just this area of support and we're wicking it, right? So we're getting down there, bought up. We're getting down there, bought up. Down, bought up, down, bought up, down. So there's definitely some action going on here. So it's on my radar. It's on my radar. Let's go ahead and jump into Hone. So this is Honeywell Internationals. They are in the same boat when it comes to being at the 200 peer moving average on the weekly. So these are longer term plays. Each candle here on the right side is a week. So I don't like what we just did on the daily. The daily is ugly, ugly, so ugly. Um, Hopefully, I can see a green candle take out this, and with more volume, would give me also a lot of confidence. But we will have to see, guys. This is definitely a longer term play for sure, and I want to hopefully holds this 200 period moving average. So, not really going to jump into this one just yet, but it's on watch. Another one that's on watch is Target doing the same thing. Target is at I believe 2018. Yeah, it's at 2018 support levels. As you can see right here, boom, boom, boom. It kind of just goes all the way through, and it's a zone, right? It's a zone. So what was basically Resistance here between 2016 all the way to 2019. What was resistance? Boom, kept hitting that area. Boom, boom, resistance. It finally got above it, came back down, tested it as support, and then pushed up, right? So if you, we can kind of get closer on that too, right here. You can see that this is that resistance area. Zhoosh, has trouble getting over it. Now it finally gets over it, and then it retests it right here, pushes it down back to see if it's support now to go back up. So that's stemming all the way from 2018, 2019, 2020, right? So we, Target makes its big run. Now it's down here at these lows, back where we can see that we do have a little bit of support here. It just kind of wicked down here and then it held. It's holding its low right now. It hasn't gapped down like the rest of the stocks have a little bit on this Saturday, but that all can change easily, quickly by Monday. But if we see a good sign on target, just a huge green, reversal on target, I believe that will be the all systems a go on target for the end of the day, end of the year run, and even maybe a sector rotation into target into the next year, right? Because it's been getting beaten down for probably 2, 3 years now. 2 years back in 2020, is this 2024? Yeah, April 2024 made a big high, and then it's just been going down. So it doesn't look pretty as far as like a longer. I mean, I'm just waiting for the reversal. So if we can see a nice strong reversal on target, all systems a go. So I'm gonna wait on this one as well. Um, some of the other picks I do like a lot is Pfizer. Pfizer, same story. Pfizer's down at some historic lows. It has been beaten up. The whole healthcare sector has been getting beaten up, and it'll eventually end. The doom and gloom in certain sectors will eventually end, and that money will rotate out of all of the hot stocks and go right into the healthcare. And you don't want to be necessarily early, but these last few weeks have given us signs that big money is coming to play. Look at the volume on this Pfizer, and what that was. I believe we saw some government funding, or was it government funding and or new medical bills, or something with the bill going on, and Myrna, Pfizer, United Healthcare, they all just popped up aggressively. So it lets me know that some eyes have gotten back onto it. Look at this weekly. Some eyes have gotten back onto it. Yes, this is a pretty sharp sell-off, but we're back now into these moving averages down here, which I'm hoping are gonna be support. So I'm in Pfizer as of this moment. I did get in. This is a very, very aggressive drop. It's kind of ugly and violent, but the whole market kind of sold off. So we'll see. I'm hoping I don't catch a falling knife here, but we are in some support areas that I can see us holding due to all these lines coming into it. So I like Pfizer here. And then another one that's at yearly lows is UPS. I don't know if this is the decade low. Wow, look at that. It's perfectly, that just seems like algorithm buying right there. This perfectly hit 82 back in March of 2020. Perfectly hit 82, and then it rocketed all the way up to 233. I mean, this is a whole 2 year run, right? And basically all of 2020, which was COVID, and 2021. So does UPS have that same demand? No, but we still see UPS drivers every single day, right? It's a backbone of the economy. So I don't, it's not going to go anywhere, right? So for a long-term pickup, 82 is pretty solid. So we'll see if we can get some buying pressure next week. This last week was ugly. The fact that an entire red week engulfed basically the green candle, it basically took it over. You can see that better now. That's basically how the week looked. It basically started and opened at the same spot. Well, this closed this week. It closed here. It opened here, and then it just engulfed the entire candle by closing way under the opening of last week. So that is a pure negative sign. But I like that this 82 has just been a 5 year low for this stock dating all the way back to 2020, right? So I'm going to take my shot at it into the end of the year type of, Black Friday, Cyber Monday, all of the holiday spending that happens and they get peak season. So I already have a position here. We'll see how it turns out. All right, guys, that's going to be it for some of my long-term picks. I do want to highlight that some of the really hot stocks that we've all been watching all year long, I did not mention them because I believe they will continue to drop in the next 2 weeks. Your BABA, your SoFi, your Palantir, your Nvidia, your AMDs. I believe Amazon is more of a like from the big guys, from the big dogs, Amazon is at a more crucial area to be picked up at than the other ones are. The other ones just have too much gap from their 200 and I don't like that. Amazon is closer to its 100 and 200 where we can see some buying coming into Amazon. And what also does Amazon do going into the holidays? They also see high demand. So Amazon is also positioning itself in a great spot. I just feel Amazon could also definitely take some more downside here as the market kind of sells off. All the ones that I showed you have already been selling off. They've been selling off for a very long time. So their reversal could come at any moment. We don't know. But the other stocks that have been hot all year, they have to cool off. And I'm thinking they will still cool off for the next week or two and then all systems will go back to the upside. So I still have all those on my radar, but I haven't jumped into them yet. I will let you guys know, or I will post them on here when I jump into it. But remember, guys, I'm not a financial advisor. I'm not telling you guys to buy, sell, or hold anything. So do your own due diligence before you jumping into any stock. This is just what I'm doing with my own money, guys. And with that, I hope you guys have a great rest of your weekend. I'll catch you guys on Monday. Peace.